Hey there, welcome to SSP live stream. Today is Monday, June 26th. Hope you're doing great. Welcome to all of our new subscribers. Super happy to have you here. I hope you're finding your way around our software. And please remember, I offer a complimentary one-on-one guided tour of our software. So all you have to do is send me an email. We'll jump on a Zoom call and I'll let you share your screen and you just kind of show me around the software, and I'll point you in directions as to, where to, how to get started and where to get the most out of our software. So again, welcome. I want to talk today about, well, you see this is the home screen from our software. Market's flat today. We've got the Dow down 29 points. S&P slash TSX up 189, almost 1%. NASDAQ down slightly. Everything's just kind of, there's just not a lot of news to work on today. We've got crude oil up slightly today. Gold up, silver up. Now look at silver, 22.85 an ounce. That has pulled back from the high. The recent high has been $25 an ounce. So I'm recommending stacking a little more silver if you can. Good time to buy it. Same with gold, below the $2,000 an ounce. It hit above there about a month ago. All right, let's look at, I want to talk about this article here. Is 6 weeks pause enough for the Fed? So the Fed chairman, Jerome Powell, raised rates recently, and he's basically saying that he's going to hit the pause button on the raising of the rates. Let's hope that is the case. It says as we get closer and closer to our destination, it's common sense to go a little slower. So, we've got rates historically not that high, but most recently since 2008, rates have been, as many of you know and have been following this, have been virtually zero. So they brought rates from a high level. They were about 8% in 06, 07. And the market imploded with the financial derivatives. It could have collapsed the equity markets and bond markets, but it didn't. There was a lot of financial stimulus added back in from the major banks and brokerage firms, a lot of mergers and acquisitions happening during that time to make sure that banks were not going to fail. So if you recall that time, as an investor, it was not a fun time. But we had, after that time in 08, started about 08, rates went to zero. The Fed, if you recall, they just kept cutting rates and cutting rates. And in order to stave off a depression or a recession, we definitely had a recession. It was called the Great Recession. Nothing great about it. It's called great because it lasted for so long. Technically, it was probably a depression. So then we found ourselves very long period of time, very low interest rates, virtually zero, and a lot easier to get financing for real estate. Property values were cut dramatically in 07 and 08. So we had this most recent history of a 10-year sideways movement of interest rates. Basically 08 to 2018, rates moved sideways, zero, stayed the same, steady. But we've had, since COVID, we've had a dramatic shift in interest rates, in market value prices. A lot has happened in a very short period of time. And it's caused the Fed to take a stance of the economy is too hot, heating up too much because real estate prices skyrocketed. We've had inflation at a high rate, and this has been their go-to thing to cool inflation, bring it down to normal rates, 2 to 3% range. So they've used the excuse of raising interest rates. And what has that done? Well, it's caused the cost of goods to go up. It's caused financing to get more expensive. And all of this has caused the consumer to pull back and spend less. So as the consumer has pulled back and spent less, it has had an effect somewhat of a lowering of prices. All of this is manipulated. That is what you need to know. This is incredibly contrived by the Federal Reserve, which, by the way, is not a government institution. It's a corporation, corporation, and it's been around this time of separating people from their money. That is the objective of Wall Street. How can they separate you from your money, right? How can they get you to spend more, pay more, tax you on money that's already been taxed? It's an insane system that we have to operate in. But for those of you who recognize that and know that, then we have to do our best to thrive within the system, and we can do it. So that's what I want to point out today. Just a couple things. Let's hope the Fed pauses, and let's just hope they stop this raising of rates. That would be fantastic. Great article here, why some fund managers don't invest in their own funds. It's actually the majority of fund managers don't invest in their own mutual funds. I'll post a link to it in the chat comment section today for this live stream. Take a look at it. 6-minute read, very interesting. All right, this headline news here. Aston Martin Lucid reach EV electric vehicle tech deal, stocks soar. So Aston Martin is a luxury brand, as is, Mercedes, BMW, just some of these bigger, Rolls-Royce, some of these bigger names. They're a publicly traded company, and they recognize that in order to remain relevant in the future as an automaker, they need to really shift gears and produce an electric vehicle. So you've got two stocks here. Aston Martin, there's the ticker symbol. We'll take a look at that chart in a moment. And we've got Lucid Motors. Lucid Motors, here's their stock symbol too. Lucid is going to supply components and systems to power future Aston Martin EVs. Shares of both of these stocks were surging on Monday following the announcement. The agreement will see Aston Martin gain access to Lucid's high-performance twin-motor drive unit, battery technology, and Wunderbox inverter, as well as technical support from Lucid. So Lucid's got the goods to make it all work, and they'll figure it out on the Aston Martin side. What is that going to mean going forward? It means that Aston Martin is going to have to, I imagine, change up their manufacturing facility. All right, a friend of mine got a new electric vehicle. It was absolutely awesome, and he was talking about it. And we looked under the hood, and there's a very small engine compartment and a very big battery, all within the front, right under that hood as you raise the hood. So cars are going to be designed differently. They're going to function differently, obviously. So this is going to be, and what I see, a big expense to Aston Martin. They might take a one-time charge. They might take a one-time charge to retrofit their manufacturing facilities. We don't know. We'll have to wait and see. But in terms of the financial details, Aston Martin will issue new shares to Lucid as well as phased cash payments totaling $232 million. Aston Martin will also commit to spending at least $225 million on Lucid's powertrain components and will pay another $10 million to Lucid for integrating its technology into its vehicles. Okay, well, that answers that question. So it seems like Aston Martin is going to get Lucid to, based on their manufacturing line, to actually do that for Aston Martin. So Aston's going to invest $225 million on their powertrain components, and another 10 million to Lucid for integrating its technology into its vehicle. So there we go. Not bad. That's actually probably the smartest way Aston Martin can go about integrating the new EV technology into their vehicles. So huge bump up though to Lucid, right? So now when you see an article like that as an investor, you have to ask yourself, how do I make money with this information? Well, we know Aston's going to be putting money out, spending a lot of money, like we're looking at a total, was that 500 million? All right, we've got new shares issued to Lucid, so they're going to issue new shares to them. That's going to increase their shares outstanding. And we don't know how many new shares yet, but as shares outstanding increase, it reduces the market value of current shareholders. It acts as a kind of a watering down strategy, so not the best. You don't really want to hear that a company is going to continue to issue shares out in the marketplace, but it happens every single day, right? So as well as phased cash payments. So these are going to obviously happen probably in milestones, right? Lucid's going to have to deliver a certain deliverable, and then Aston will pay for it. So totaling 232 million. So that's the first part of the deal. And then they also commit to spending at least 225 million. So we're looking at easily $500 million all going to Lucid. So this gets you thinking, okay, I've got Aston Martin Aston's on the capital outlay part of it, right? Going to spend all this money with the provider, Lucid, that is going to bring the deliverables, the EV component to them. So what do you do in that situation? Well, what you do is you look at both charts, both stock charts. So we've got Aston Martin. I think you can see the chart here, right? And as I put my cursor over on Aston Martin's current stock trading price, you got $4.61. We've got green above red, right? EMA above SMA. That's awesome. We want to see that. Most importantly, we've got the stock price above the SMA 50 and 200. So what that means is the stock has support. It has support in the near term and in the intermediate and long term. So as you can see, this is the 1 year chart. The stock started out a year ago at $6.64. It had a drop. This might have been even it's got a $2 dividend, so there might have been calculated into a split of some kind, a reverse split, or pardon me, just a split. And then we've got the stock literally in the tanker. We recommended November 11th of last year to buy it at $1.85, and the stock moved sideways until today. We're at 461. Big move today. Friday's close was 420. Excuse me. Friday's close was 415. So up 11% today. So this is a 3-star stock, high risk. Okay, 3 stars, high risk. Why 3 stars? Well, what you do is you scroll down, you look at the financials. There's only 2 metrics there. The revenue growth is actually good, 27%. That's year over year. Book value is quite high compared to the breakup value of the company. So that's why it only has a 2-star rating. And by the way, see all these little these green icon buttons? Click those. They're all clickable. They're embedded throughout the site, and they give more detailed about the particular metric you're looking at. Current ratio is kind of low, 0.99. That's why it has a 1-star in current ratio. Current ratio basically shows how well a company is executing with the cash on their balance sheet. I would say they're not doing such a good job. We want to see a company in between the 2 and 3 range in this metric. Technically, it looks fantastic. We've got the EMA above SMA. It brings on the amber, yellow light there. We want to see it go green It will go green once the EMA ticks a little bit higher above the SMA. We've got MFI at 86, quite high. That is an indicator, that's called the money flow index. It's an indicator that the stock next move might be going down because it's starting to become overbought. So yeah, you've got these technical, you've got the financial metrics. It just, on a technical basis, looks decent, but it doesn't, these other metrics, financial metrics, are a 3-star. 3 stars, so watch closely. But this is might be good for your watch list. So all you do is toggle, see how I toggle the watch list button. Now it's on my watch list. I'm going to see it across, see that screen across the top there. We call it the ticker tape. You got Apple, all these other companies that trade. It will now show up on that. So as I leave my computer and the software open up for the day, I can see the stock trading as I go, as the day goes. All right, so that is Aston Martin, 3 stars, high risk. The other party to that was Lucid Group. That's your electric vehicle company. And look at this stock chart, a little bit different, almost the opposite of Aston Martin. We've got starting out the year high on a high note, $17.94 a year ago. So the stock has done nothing but go down for an entire year. Painful for shareholders, right? But we had a buy rating right here, January 11th, earlier this year at 793. And the stock had a nice little move up to $12. So you would have had your 50% return right there in a 2-week period. Hopefully you took a profit if you owned it back then. But now it's just struggling, right? Stock price is below all of the averages. You still have green above red, but you've got the SMA 200 sitting at 964, SMA 50 at $7.09. The stock is struggling at 568. But look at here, we've got the MFI, the money flow indicator, at 38. So for those of you who follow my course and my work, 38 is starting to see an oversold condition. So we want to see the stock, 2 things need to happen here. We want to see that SMA 200 drop a bit. We want to see the stock price go up so that instead of resistance, it now has support, right? Stock price support, it's got the resistance now, having a really tough time getting through those indicators. So this is one, 3 stars, same thing as Aston Martin, same rating, but average risk. So not high risk, average risk, does not pay a dividend or anything, but certainly worthy of your watch list, in my opinion. So also want to share the stock pick of the week. I am in the Stock Rockets. If you go to our little 3 hamburger menu, we call it, go to winning stocks, click Stock Rockets, loading the chart. And we've got this company here, Li Auto Inc. This has been appearing on Stock Rockets for the last few weeks, almost actually the last month. Look at this chart, nice chart. Started out just about $38. Had the decline, but you know, every company declined last year. The market was down like 17% last year. So during this time, it just did what the market did. Had a nice bounce up here to 22, and then sideways, right? 22 from the beginning of the year to May, and then we saw this happen. So we've got stock price above all of the indicators. So now it's got the stock price here, got the indicators support. It's got that support. green above red, MFI at 67 in the sweet spot. This is my pick of the week. Li Auto Inc. Again, in the EV space. $33.89. I'll put it in the notes. If you have any questions, please leave them in the comments for this video, and I'll be happy to answer them. Have a fantastic trading week, and I'll see you next Monday.